All right, everyone, welcome back for the episode of This Week in Charts via Conover Trades and Wall Street for Main Street. If you guys not done so already, don't forget to give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on ConoverTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So last week we had a more or less flat week. If we take a look at the weekly chart here, you can see we were up, about basically like 20 points on S&P, so not much going on at the end of the week, but that wasn't without a little bit of volatility. We had a nice gap down on Monday, and again, this market continues to stubbornly buy dips. However, we're still looking at this 6,500 area on SPX really until like end of quarter here as being a very, very stiff level on the sell side. So it's just kind of this tug of war here where we have dips being supported, but dealers not willing to hedge past that level, and it's creating this really tight range here that will eventually lead to overcompression, and it will lead to either a breakout or a breakdown. We do have catalysts this week. CPI will be on Thursday, PPI on Wednesday. My guess is they won't change the 25 basis point consensus cut for next week, which is where we have our FOMC meeting. So that will likely be, to me, like around where we're going to get a catalyst for this range. So we might be stuck in a range for a little while longer. Now, last week, like I said, wasn't without a little bit of volatility. On Friday, we gapped higher and we closed down, but we were able to come off the lows. And you can see Monday here, we're just in a really tight range, and the market is just on the quieter side here. But the big kind of headline from last week was Friday's jobs report missing by quite a bit. Expected was about 73,000. We only created 22,000 jobs. And now you might say, well, that's okay because the Fed, it gets us closer to rate cuts. And so far, it seems the market is generally taking it that way. However, the big caveat here is June was revised lower, and it was actually revised negative. And if you want a little history lesson here, that's only the third negative print we've had in the last 17 years. Last two times were the pandemic and it's just Great Depression, Great Recession in 2008. That's very significant, right? So it does appear that the bond market is also talking about that. Take a look at TLT here. Friday, gapping above the 200 and really a gap and go day. Today, gap and go day as well. So bonds finally getting a real rally here. Bond shorts were very aggressive down here, and they are getting squeezed. I do believe the bond market is, kind of concerned about this. Now, that doesn't mean, that you need to sell everything here. In fact, timing a recession is very difficult. A lot of people end their careers trying to time recessions. But you can see, based on the data here, 2s and 10s, they've been uninverted for a year now. So that's quite a bit of time here, and the bond market is starting to wake up. So that's something to consider here moving forward. We do have a rate cut priced in for 25 basis points, and it does seem like the market wants to hold up into that. And my guess is the Fed guidance will really determine direction here. My kind of thesis, though, is, and has been, that 6,500 SPX is still a very stiff level, and I don't see us getting through that really anytime soon. So we'll see if that remains the case. This week, maybe on the quieter side. Again, CPI, unless it really blows out in either direction, is not going to move the 25 basis point expectation. So overall, S&P in a tight range here. And right now on the downside, I would say you can get a catalyst lower. I'll get rid of my day trading lines there. A catalyst for a little bit of a dip here would be you have a nice rising wedge, and if we break this low with volume, we could see a little bit more of pullback type action on the SPX here. It really coincides with that 64.40 to 64.50 low. And the reason I say that is this was the low that we put in after the jobs reaction. So we had kind of a gap and crap day on Friday after the jobs number. The dip was bought. If we take this out, I think that could open up selling, and you'll see that that low right there coincides with the 20-day as it does on ES. So that's a big level here to me. Right now, the triple Qs, they're holding up right now. And again, starting to see a little bit kind of disinflation, right? Disinflation type market. right? The Russell was leading for quite a while here versus the Qs. The NASDAQ was not making new highs. It still hasn't made a new high, but last couple of days, Qs have inched up, right? Slowing economy favors disinflation, and I think you're seeing that in the Mag 7 as they perked up just a little bit here. So again, a lot of jockeying for position, a lot of moving around here. My guess, though, is that this week here is mostly range bound. You can see the Dow here is holding up well. You do have a bull flag there on the daily, and we'll see if that can resolve higher. If we lose 450, it could be a failed pattern, though. Semiconductors are on the, well, they were on the weaker side for really a little while here. Again, no new highs. I mean, we had a nominal high here, but no new real follow-through on new highs since July 15th. So that's almost 2 months now of sideways there in the SMH. We also have a broadening pattern there on the daily. IGV, choppy week last week, but it did have a nice gap here today, a gap and go. And I know Oracle is up, there we go, Oracle up nicely there. That is helping out. But yeah, reclaiming the moving averages. So IGV trying to change trend here. And you can see on the weekly that has, it's holding the 20. So real no damage on the weekly. It has pulled back here, but really nothing wrong with cloud software at the moment in the bigger picture. We got the transports here. They were soft last week. They're soft again today. We'll watch this little trend line here for a retest there. You're still holding that inside bar, daily chart inside bar pattern. So we'll give the transports the benefit of the doubt unless that pattern fails. Yields here, or rather bonds, 2-year note, again, breaking out pretty much across the board here. There's ZN. We talked about TLT. There's ZB. So all ends of the curve moving higher here. So market is expecting a slowdown. XHB is loving it. Very nice move late last week, and I think that's going to all-time highs here. So housing liking this. IYR holding up a little bit here too. And you know, it kind of had a bit of a breakout here. No follow through, but it's basing. So housing does like this expectation of lower rates now. One red flag I'll point out, though, XLF on Friday did not bounce off the lows like the stock market did, the rest of the stock market. In fact, XLF made a new all-time high. It gapped up above the previous day's high, made a new all-time high, and then closed at the lows of the week. Made a new low of the week, too. So be careful with that when fins, if financials sell off, this is something I've learned over the years, if financials sell off with no news and no reason, and they break down, it's a red flag. I wouldn't say they're broken just yet, but this is on my radar here. If this starts breaking down, and especially if we don't get any news, it means somebody knows something. So just be careful with them. That said, KRE is holding up okay. It did hold Thursday's low on the reversal. So regional banks holding up. That's a big positive. So perhaps just profit taking in some of the big banks. Just keep that on watch. Broker dealers, again, also been in a range since July. Possible head and shoulders here too, but no confirmation yet. So we need that to trigger. Oil, lower, again, as you might expect. I'd be careful with oil here. Lower highs there on the daily. I don't think 60 is that good of a level anymore, so this may see the upper 50s soon, unless it can reclaim 64. So we're watching that. However, XLE, that did take a little bit of a dive, again, on the jobs data, but it still has room for higher lows here. And you can see Exxon, for instance, lead stock in that, you know, rebounding off this trend line here. So it's retesting, and if it can get a bid off that, again, don't think that because oil goes down that oil stocks have to go down. It doesn't always work that way. It typically does, but not always. But XLE is still hanging in there a little bit. XOP as well, retesting that trend line. OIH also with a nice base here. If this can break through 260, it can go a lot higher. So the oil stocks, energy stocks doing okay here. Relatively. Dollar index looks like it wants to roll over here. I know there's a lot of shorts in it, but you need a macro trigger in order to squeeze the shorts, and we don't have one right now. So dollar is weak here. Very weak. Looking at it versus the yen. Been tight here. This is the moves coming in that too. Anyway, gold here. You know, I didn't think it was going to get much through 330, but we did catch this. You know, we saw some big wigs buying way back at around 310, and we jumped on that trade, and that worked out very well. I did not see us go much through 330, though, I'll be honest. We're at 335 here. I think that's about max move for the week. I would just say right now, I mean, I wouldn't fight this at all, but if we pump into the Fed, that's probably where you're going to get your profit taking. But gold, man, what a move. You know, it's textbook breakout, right? The only thing I would say, too, is just the monthly is still a parabola, but daily and weekly look fine. Silver making new highs. Well, it was a few minutes ago. There's a little dip there, but it just made a new multi-year high about, like an hour ago. Nonetheless, trend is still up nicely. And the one thing I like, again, SIL, new highs. GDX, new highs. Go AU, new highs, right? So as long as the miners continue to lead, I think that's a good sign. Now, if the miners start stalling out and gold goes higher and silver goes higher, that maybe your signal profits are going to get taken pretty soon. So far, they're fine. Platinum, nice rebound. There is room for a lower high, though. It's gotta clear 1450. Palladium's a little bit weaker. It had a pretty steep retrace. I don't really love that right now. I don't hate it either. And then copper here, contract roll. It did try to get through 470. It didn't quite do it. This is just, there's just nothing here. I mean, it's just a really tight range. It needs to do something, needs to firm up, needs to put in some sort of a pattern here. Right now, I can't really do anything with that. Last week, crypto was very soft, but Bitcoin over the weekend, you can see here, put in it came back here to this kind of support zone, right? And since then, you have a little kind of pullback in a flag there, and it's trying to break up right now. In fact, we actually just day traded MSTR, and that's in the money nicely for us. But yeah, Ether, same thing. So as long as we're holding this green bar here, this can try to curl back up. So it was a little soft last week, but it has firmed up a bit. So we'll give crypto the benefit of the doubt for now, as long as it is holding those supports. So anyway, with that said, again, definitely some stuff going on with the economy, but again, timing a recession is let's just say I've seen a lot of people lose their shirt doing that, and a lot of the time, when you get those signals, sometimes you can get squeezes beforehand. So just be aware of that moving forward. But personally, I think the writing's starting to come on the wall here. And for me, the bond market is really, really starting to confirm that. So we'll see what we get this week. With that said, you guys take care. Don't forget to come find Jason on Patreon and find me on carnivoretrades.com. I'll see you guys all next week.